Happy Monday, everybody. To start off, happy Jewish New Year. I hope you all have a great year ahead. Now, today is a tough day. It's the 1 year anniversary of the October 7th attacks on Israel. We're now into the second year of captivity for the remaining 101 hostages, and Israel is still under fire daily. As I usually do, I'm going to take this back to how it affects the markets and the economy, but this is not like other days. So please keep the hostages in your thoughts and Israel too. Let's take a few moments to review last week's market action and preview what we should see this week. Today is October 7th, of course, 2024, and this is your Monday market update. Stocks opened lower last Monday with the mega cap tech still under pressure as the Chinese suggested that NVIDIA chips should be avoided. As you notice, these aren't even called big cap anymore. There are a lot of those. These are mega caps, and it's a new category. I have to say, I'm not so sure they can avoid these companies. But when they start to throw around that idea of avoiding companies like Nvidia, this is what happens. European automaker Stellantis issued a profit warning following similar cautious guidance from Volkswagen, dampening hopes for a global economic soft landing. Rising tensions in the Middle East, specifically between Israel and Iranian-backed militias like the Hezbollah, kept oil markets on edge. The threat of an East Coast port strike also lingered, raising concerns over potential supply chain disruptions. We do know now that the port strike was short-lived or kicked down the pier. We'll revisit that after the election if they don't come to agreements before that. Overall, this is doubtful to have a big impact. Last time in 2014 on the West Coast, it did not, but we do have the media reminding us about supply chain issues from COVID. Regardless, it's not an issue at this time. Stocks rallied into the close, driven by quarter-end positioning and cautious optimism from a Fed Chair Powell's speech at the National Association for Business Economics. Powell's comments were seen as slightly dovish, more slightly dovish than expected, with him pushing back against market hopes for a second consecutive 50 basis points rate cut in November. At the end of the day, the Dow was just up barely, but a record close. S&P up just under 0.5%. The NASDAQ was up about 1/3 of 1%. Just a quick recap of Q3. The Dow was up almost 9% on the quarter, and that leaves it up 11% year to date. S&P was up about 6% on the quarter, up about 22% year to date, and the NASDAQ was up just under 3% on the quarter and up about 22% year to date. About broadening out, the S&P Equal Weight Index up the most of all of these, up 9.5% for the quarter and up 15% on the year. Risk-off sentiment took hold on Tuesday, with stocks gapping down at the open as traders digested the rising geopolitical risks. Iran's ballistic missile strike on Israel was the focus on that front. This marked a significant escalation of the conflict, although Israel's response was measured at that time. Investors feared that a further deterioration in the region could lead to oil supplies disruptions, pushing prices higher, and WTI crude oil surged almost 3%, closing at $70.14 a barrel as fears of supply disruptions increased. Gold rallied another about 1% as another safe haven asset was on the rise. On the eco side, the JOLTS report showed a mixed number of labor on the labor market, with job openings rising to 8.04 million, but a decline in the quits rate, signaling reduced worker confidence. Remember, the labor market is under the microscope. To start the month and the quarter, the Dow was down 0.5%, S&P was down almost 1%, and the NASDAQ was down about 1.5%. Tech stocks, yes, those mega caps again, had some of the biggest losses on the day. Stocks gapped lower again on Wednesday as markets struggled to interpret mixed signals from the labor market, with the ADP employment report showing a stronger than expected 143,000 increase in private payrolls, which diminished hopes for aggressive Fed rate cuts. Nike's earnings missed, highlighted by a 10% year-over-year sales decline, further weighing on market sentiment, with the stock falling down 5% on the day. Concerns over Middle East tension continue to dominate the narrative, with Israel preparing for a possible retaliatory strike on Iran. WTI crude went up again, almost $72 a barrel, another 3% on fears of oil supply disruptions. Oil was a standout and gold was down a bit, but the Dow, S&P, and the NASDAQ all closed right around the flat line. For the third day in a row, markets gapped lower on the open. Believe it or not, inflation was the fear of the day. Even with that, I do maintain this is not the key to this market at this time. Those fears were stoked by mixed eco data and rising oil prices. The ISM Services PMI came in stronger than expected at 54.9, signaling robust activity in the services sector and raising concerns that inflationary pressures could persist. The ongoing strike in the U.S. ports, as I mentioned, tentatively resolved late in the day, contributing to market anxiety, with the longshoremen securing a 61.5% pay hike over the next 6 years, adding to wage inflation pressures. As I said, one of the inflation concerns is energy prices, and once again, with the Middle East tensions not calming at all, oil was up another 5.5%. There was no follow-through selling, so that calmed nerves a bit. Dow closed about 0.5% down. S&P down less than 0.25%, but remember the idea of a broad market. 4 of every 5 S&P stocks were down. The NASDAQ did manage a gain, but just barely. Stocks surged out of the blocks on Friday, trying to turn the tides on what looked like a negative week, the first one in 4 weeks. A surprisingly strong jobs report reassured investors about the health of the U.S. economy. Non-farm payrolls jumped by 254,000 in September, far above the expected 150,000. Unemployment rate ticked down to 4.1%, positive signal for labor market strength compared to the anticipated 4.2. This data put on ice fears of an economic slowdown and boosted hopes for a soft landing. And that, of course, led to a broad-based rally across the sectors. Labor market strength also moderated concerns for an overly aggressive Federal Reserve, with analysts predicting that the Fed might opt for smaller rate cuts going forward. Financials led the S&P sector, up about 1.5%, with JP Morgan and Wells both up 3% each on the day. Labor market news reads into everything, rates, and even consumer spending. Remember that consumer is about 70% of the U.S. economy. Mega cap tech was also back, as was energy, with oil spiking another 1% of the day. The energy sector was up 7% of the week. Dow was up about 0.75% for another record close. S&P up just under 1%, driven by both tech and financials. And the NASDAQ was up 1.25%, biggest one-day gain since September 12th. For the week, the Dow was up slightly, kept the winning streak alive. S&P up about 0.25%, and the NASDAQ also up just slightly. Oil was up over 9% on the week. It was not looking like the market would pull out and win, but they did. So let's look ahead to this week. It will be a pretty big one, late in the week especially. This week has almost all of it. We'll get inflation data. We'll get CPI on Thursday, PPI on Friday, almost with the jobless numbers on that day. With PPI, it'll follow, as I said, on Friday with University of Michigan surveys also. Remember, I don't think inflation is the focus, but labor sure is. Before that, we'll get some eco data that markets may pay attention to. Consumer credit has been a big number lately. That's today. But recall that as long as people have jobs, a la Friday's report, credit is not a real concern to markets. We will get the Fed head parade throughout the week. Bostic, Kashkari, Musalem, Logan, Goolsbee, Barkin, Daly, and Williams. Wednesday is when we'll get Fed minutes from last month's meeting. I don't see any surprises there either. We'll get a read on how we're snacking with Pepsi earnings, but the big ones are at the end of the week with the banks. These are who markets look to hear the pulse of the market. At least this week they do. We'll get JP Morgan, Wells, BlackRock. Those will get us started on Friday before the bell. For the tech crowd and those watching that word automation that was big in the union arguments lately, Tesla's robo-taxi event is Thursday, and AMD has an AI event Thursday also. I think this automation thing will be big news again. Remember, that was Stephen Hawkins and then again Elon Musk that said that we'll all be replaced by robots. And that was back in 2017 for Hawkins. So that is the week ahead, and that's the week behind. Let's keep in touch and let's keep the goals in mind. Finally, as I started on this day, October 7th, please keep the hostages and all of Israel in your minds. Have a great week.